Hi, everybody. This is Gary Dean, and this is our weekend video report for Sunday, March 26, 2017. Hope you guys are having a fantastic weekend, and let's get started. So, one of the things I've been saying was that the market was really on hold until the healthcare vote came, and from there, it was we really could have went up or down, and it would have made sense from a technical front. I said that it would have been made more sense and probably been more helpful for a bullish case if it went down first, and then from there, found some support and went up. But we saw a little bit of everything on Friday where it went down and then they decided not to vote. And for some reason, the algos took that as a bullish sign, which I'm not really sure why, because it just leaves that uncertainty back up there as far as, what's going to happen with it. I think it was the fact that President Trump said that he was, they're going to either try to pass this bill, yes or no, and he was going to move on to, to the tax breaks and stuff like that. And I'm pretty sure that's really what the algos picked up on because that's what's the market is really the most important piece is the tax piece. It has nothing to do with really the healthcare, but the way that the order flow was put in place was that the tax bill had to get approved first, and then they were going to go to the taxes and then whatever else. So I think that did it, but we saw a little bit of everything. The market was down pretty heavily heading into the vote because they found out they weren't going to have enough votes to pass it. And then from there, we saw them postpone the vote, and the markets reversed and headed up, and we pretty much ended where we started, which has been the norm lately. We're getting these big moves up and down and ending exactly where we started. So what we notice is that the we keep finding buyers as we close in on this 50-day moving average here. So this is going to be the important line for the bears. They need to push through this level to get a pretty quick drop because there's really no support to the 2301, and then more likely the better support would be down at this 2278 level. So if they break through this is where it's going to go. Now, if they head up, the really what the bulls have to do is get it above this 2359, and that would give them a chance to kind of close this big bearish candle at the 2381. So that's really the range that we want to be watching is this the 50-day moving average at the 2330 and the previous highs here at the 2258. But if we just look at the kind of technicals, they're just starting to roll over. So they're nowhere near oversold in any case. We did have some bearish divergences heading in it. So again, from a technical standpoint, it would make sense to come lower, but I'm not as bearish as I was. I mean, I really thought that this move was going to come a lot deeper than it did, but right now we just, I want to put on a neutral hat. I don't want to stay overly bearish on things because we did get a drop from the 2401 down to the 2335. So 65, a little over 70 points. And I as much as I'm saying yes, I think lower is likely. I just don't want to be hanging my hat on the bearish side as much as I was. It was there was a lot of reasons for this to drop and drop harder than it did. So we got the drop. It wasn't as powerful as, I was expecting. And now we have to just see how things play out. And like I said, if it moves lower, it would be perfectly fine with me because that would actually make more sense and set up a better buying opportunity. But if it starts heading higher, then we just put our aggressive short hats off and look to make some quick money and just stay in trade mode. So let's take a look at the 60-minute chart here. And we did make a lower low here, barely, and it was only for a few seconds, but that did give us bullish divergences. So that's another reason why I'm saying, I don't want to stay overly bearish on this market and more stay open-minded just because we do have a buy signal. We're pretty oversold on the momentum indicator here, and we're trading within this channel. So again, lower, if it heads lower, it makes perfect sense. I would say not to fight it and we wait for a better bottoming pattern to show up. If it heads higher, then really what we want to keep an eye on is this 2362 level. If they get above that, then we're going to get a quick move up to the 2376. And if they get above that, then they're going to be testing these highs here. So we do have bullish divergences, even as quick and narrow as it was. They're there. If it heads down, then we'll probably get some better bullish divergences, and I would keep an eye on that, the 2330 or the 2327, to see how that holds up. If it holds, then and we start getting some momentum to the upside, I'm not against jumping long just for a quick trade and see how things play out from there. If they start losing this 2327 level, then we start looking at that 2301. So this range on a shorter term chart would be the 2364 down to the previous lows, or let's just say the 2327. Below that, we're going to 2300. Above this, we're going up to 2376 and possibly up to the 2390 level. On a 15-minute chart, you as they were trying to push higher, we did have some bearish divergences in place. So these bullish divergences right here caused the rally, but we ran right into a resistance zone, and then from there went lower and took out these lows. So we do have some bullish divergences on the 15-minute chart, but you can see when we made it up to these levels, we did get into a little bit of the overbought levels here. So you can see we have this trend line right here. If the bulls can push through it, most likely they would do it on a gap up tomorrow. Then we just want to keep an eye at the top, and that's right around that 2368. If they take this out, then we start looking at that 2327 and the 2318. So I wish we had some more information. I don't know how they're going to react to the no vote on Friday. It seemed bullish just from looking at the markets. Again, I'm not really quite sure what's so bullish about it, but we just really want to, we want to get more into the trade mode, remove the ultra bearish hats. I still kind of have a bearish sense, but I'm willing to take that off just because the market did drop. It just didn't drop as much as I expected. And, that's going to happen sometimes. It's not going to do exactly what you expected. So you just switch, we don't even dust ourselves off because it did go down. It just, like I said, didn't go down as much as I thought it was going to. But we just wait for the next setup and go from there. So with that, have a great rest of your weekend. I'll talk to you guys tomorrow.